What's up, you guys? My name is Daniel, and on this channel we talk about personal finance, and usually I'm talking about the stock market. And today we are back at it talking about the stock market. So I'm going to be going over a few of the stocks that I've talked about on this channel and just giving you a quick update on each one and my thoughts on it. And we'll be looking at the charts, and I'll be trying to apply some technical analysis and telling you a story of where I think the stock is at right now, whether it's good for you to buy as a short-term investor or as a long-term investor. And I'll be going over another stock that's totally new to this channel that I've never talked about, and it's gone up by I think around 200% since I bought it. But this is all going to be fairly brief and quick because I want to get through a few stocks and keep this video short. So let's jump right into it. So here we have the charts open up with the candlestick and the volume, and I'll be also adding in some indicators into here as we go through. Along with this on Yahoo Finance, we can also see that there's different things like statistics. If I go back here, so it shows the statistics of the company. There we go. So it shows like market cap, trailing PE. Well, for DCBO it doesn't show that. Forward PE, they have price to sale, price to book. So it's very convenient. As well as they have a thing in the summary tab where you can see all the different news that's been happening to the company. So I think it's a great place to read quick headlines and look at articles that interest you about the company. So let's go back to the charts right here. And usually how I set up my indicators, I'll show you that right now. I usually use a moving average. I do 50, set that as purple. Then I'll use another moving average, and I have it at 100-day moving average. And I'll use the yellow line, and then I'll do a 200-day moving average. And I usually set this to green. Here on the moving average, you can see there's different things that you can change, like the field close or the type is simple. So you can choose basically what price you're using for the moving average, whether it's the open price, the highest price of the day, the lowest price of the day, or time period actually, the close price of the period, and there's a few other things that you can choose, which I'm not sure what these are. Probably for more advanced traders, but I use a close price. Then there's different types of moving averages. So I use a simple moving average. You can also use the exponential or time series, and then there's these other ones which I typically do not use. I usually stick to either simple or exponential, but today we're going to use simple. So as you can see here, the chart is populated with moving averages. The green one doesn't go back as far because DCBO is a relatively new company. You can see the start of the green line is basically the first candle, which there's been 200 previous data points before it. So that's why it starts about here. The 100 starts here and the 50 starts here. Another indicator that I like to use is the RSI, which is the Relative Strength Index. And this basically tells you how much demand there is for the stock, whether it's high or low. So are more people buying or selling the stock? And I just go the default. And what's interesting you'll notice here is whenever it hits some sort of peak in the RSI, so on this day, the next day it actually goes down. So you can look for these patterns in the RSI. And likewise here, when it hits like a very high day here, this green candle, you can see that it goes down the next day. It's not always going to work out this way. Sometimes it can continue going up. And honestly, you don't know when this RSI indicator is just going to turn around. So those are mainly the indicators that I use when it comes to Yahoo Finance. Now let's move on to talk about DCBO stock and what I see in the charts today. So first of all, what I note is that the stock price today, this candle here, it's above the 50-day, the 100-day, and the 200-day moving average. So to me, that kind of signals that the stock is not very cheap. And back here, you can see that the stock actually dropped below both the 50-day and the 100-day moving average. And history also shows that eventually it crosses back over and goes back up. So if you're looking at the DCBO stock in the future and watching this video, and you see the candles below the 50-day and the 100-day, and even below the 200-day moving average, it's probably a relatively safe bet to say that DCBO is undervalued, and it's probably a good time to start a position there and average into it. If we look at the candles a little bit closer, you can see it's very tight knit here. So the stock price is basically hovering around the $49 level. It drops below as well as goes above, but it always is coming back to the $49 level or $50 level. And the reason for this is, if we look at the recent news, DCBO actually had a secondary offering of shares announced on August 11th, where the purchase price of the shares for the underwriters was $50 per common share. And that lines up perfectly with this huge candle right here, where it dropped down to $52 and then down to $50 the next day and has been hovering there since August 11th. And I foresee that the DCBO stock is actually going to hover around $50 for the next couple of days or so until the shares are issued. And that's where I highlighted down here that the closing of the offering is expected to occur on or about August 27th, 2020. So I think once this date happens and the shares are issued to the underwriters, then we're going to see some movement in the stock. And I think that maybe it's best to, if you're looking to open up a position and you're not like super interested in jumping in right away, you should wait off until August 27th and maybe the week afterwards to see where the prices are going. And I think if we see like a 10% decline or a 10% increase, that's a good indication of where the stock is headed next. So if we see a drop of roughly around $4 from $49 and it drops to $46, you can expect a bit more of a pullback. And I'd say it would probably drop to this support level of around $38. But if the stock price goes up above $50 on August 27th or the week following that, then I would recommend for you to wait till it crosses the $57 mark before making your entry into the stock, because it could go up a little bit here and then come back down and just kind of dilly-dally here, but you have no confirmation where the stock is moving next. But if it does go above this previous all-time high and has a full candle above it, then I would suggest that's the best time to buy in, because we're going to see another leg up just like we did here. So when you had roughly a full candle above the $42 mark, which I would say is probably around here, then that was sort of confirmation that the stock price would shoot up. Just for full disclosure, I did actually buy on this day here. The reason why I bought there was I saw this wedge pattern right here, and it actually broke above the wedge pattern on this day. And that's why I made my purchase here with a thesis that it would continue shooting up higher to its next level. And ultimately it did play out. And I would say this is a combination of market timing, luck, as well as just being able to read the charts. The next stock that we're going to move on to here is Dye & Durham. And I've talked about this stock when I reviewed my portfolio recently, where I made a purchase of Dye & Durham at $13 as well as $22. And I purchased, I believe it was on this day here, where it hit basically the all-time highs. And you know, it kind of sucks for me that I did buy at $22.50 or so as my second purchase. But my first purchase was somewhere around here at the $13 level. In both times I bought 20 shares each. But as you can see today, the stock price did actually move above the $22.50 mark to $24.95. And honestly, if I did not have a position in Dye & Durham and was reading these charts, I would say right now would be a great time to buy, because this is basically a full candle above this support level that I see right here at $22. And you can see there's a bit of a wedge pattern here, so I'll draw the line for you to see what it looks like. This is the wedge pattern that I see. So if the stock breaks out above this wedge pattern or below this wedge pattern, it's going to continue in that direction. And sure enough, yesterday we saw that there's a candle here that broke up completely above this wedge pattern here, and today it continued on there. And I expect, based on the technical analysis here, Dye & Durham stock is going to jump around, I think this is around $18 minus 22, so $4 above $22. So maybe in the next couple of days, we're going to see Dye & Durham stock sitting around $26 to $27. And that's probably where its next level out is going to be before it consolidates and makes another movement after that. So if you're watching this video and the stock has gone up after this, because I probably won't release this video till Wednesday of this week, then you know, see where Dye & Durham is, and if you're really interested in purchasing the stock at that current price, use this technical analysis as you will, and make your own risk assessment when you're buying the stock. You can't just look at the technical analysis, you also have to look at the finances and the business, and if you love the business or not. The next stock that we're going to look at here is Green Power Motor Company. And this is the new stock on this channel, which I've never talked about. And this stock is very interesting because I did buy into the stock not on my personal account, but in one of my private accounts. So the stock today had a huge move up, and you can see that it went up 83% or $1.82. And honestly, I don't exactly know why, but I have a suspicion based off of some recent news. And the recent news is it's because they filed for an IPO on the NASDAQ. So this happened about 4 days ago, and this correlates with basically this candle right here. And this was the start of the upward trajectory of Green Power Motor Company. And today was just particularly big, and I think it's just because investors saw this huge bullish pattern where the stock price just kept shooting up and up and up, and you can see the volume increase over these past few days. And I think the reason for this is why listing on the NASDAQ shot their price up is because the fact that they're listing on the NASDAQ, they now have a lot more investors that could invest in the stock and ultimately drive prices up. So the stock market is basically supply and demand. And right now, the stock is only listed on the TSX, and I believe they have pink slip shares in the US, but those aren't as accessible to people in the US. But the fact that they're being listed on the NASDAQ, this is a larger stock market exchange with a lot more exposure. So if you can own this company right now, where the demand for this company is a lot smaller, because basically its only demand comes from the Canadian market and the over-the-counter market in the States, which is small again. Investors are probably thinking buy in now because there's going to be a lot more demand coming later on and driving prices up further. And I think the supply is going to stay roughly steady because ultimately they're not issuing any more shares. So that's probably what investors are thinking right now when the stock price has shot up so much, and why they're still willing to continue boosting this price up after it had a pretty good run already here in the first 3 days, and it shot up today by 83%. I'm not really sure how to read the charts going forward in the next couple of days, but it's very possible that we might see the stock continue moving up in the short term for this week and then see a small pullback when investors realize that this is just crazy. I should just take my profits and wait for the stock to pull back. So, if I'm going to put a prediction on the stock, I predict it could go up a little bit more in the next 2 days or so, and then we're going to see a dip in some sort of consolidation, maybe in the $3 to $3.50 level. And it's going to consolidate here for a little bit, and if there's any sort of news, that's going to dictate if the price goes up or down. But if there is no big news, I'm thinking we're going to see some sort of wedge pattern, and then maybe another leg up as it gets closer to the IPO on the NASDAQ. Now let's jump over to the fourth stock in this video. And this is the Very Good Food Company. And I did a review on this company, and you can check this out in the description down below, where I thought this could be the next Beyond Meat of Canada. And unfortunately, the stock price has not worked out that way, but it's only been a public company for, a month or so right now. And you can see that it had a very good run up initially, and it peaked at around $2.50 according to this candle. And then it kind of had this U-shaped pattern, and since then it's been petering down. And honestly, the reason why I think this company has not seen as much traction, and honestly, my opinion on why this company has not seen as much traction is because they haven't had any big news come out recently. And I think ultimately, they've been drowned out by all the other investment news out there. So people are slowly selling off their shares as they're not seeing as much action in the company. And we're seeing those weak hands just sell out right now. And right now, the price is continuing to move down. And if you're looking to enter into this company, I think right now might be a decent time to start averaging in. And the reason why I'm still bullish on this company, even though the stock price is going down, is because if we look at their website, let me just go to that right now. The Very Good Butchers. So if we go to the website, we can see right here at the top banner, there's basically an overwhelming demand for their products, and the processing time on orders will be 4 to 5 weeks. So the demand for their products is still extremely high, and I don't doubt that it's going to be extremely high for the near future, for the next 1 or 2 years. And ultimately, when they release their earnings next, I think we're going to see some stock price popping because last time that I reviewed the company, they had some promising wholesale agreements that led to some unearned revenue. And that unearned revenue was basically 2 to 3 to even 400% greater than the previous couple months. So I think the Very Good Food Company right now is in a good position, and if you're looking to open up a long-term position in them, now would be a good time to enter into the spec stock. But do know that this is a speculative play, and they're currently not a profitable company. The next stock that we're going to look at here is KXS. And I was an earlier investor in KXS, and I sold out around, I think, this area at the 170 mark because I saw this huge run up in stock price, and I figured it was time to take profits. and I did not foresee the stock going up all the way to $225. However, I do still hold a pretty sizable position in a private portfolio of mine, so I'm not too bummed out about selling out of my 5 shares in my Wealthsimple portfolio. But looking at this stock chart right here, what do I see forming? So I can see that we had, this recent high, and then it kind of dipped back down and then went back up to a new high. However, since then it's dropped back down. And I think that my prediction for this stock would probably be a head and shoulders pattern, because you can see that this is the first shoulder and then this is the head, and they came back down, and we're probably going to see a shoulder here. It just kind of seems like that's the pattern that's probably about to form. So I wouldn't be surprised seeing a shoulder up to around 212, and then it could be dropping back down to this support level of 170. And I think that we saw this major stock price appreciation that we've never seen in the history of this company, and that it was basically too far run up that I think investors are seeing that this is a little bit ridiculous, the PE and the PS ratio that you're paying for this company, and it's probably going to sell off to the 170 level. But only time will tell, and these are just my predictions. Take them with a grain of salt and do your own research if you're going to purchase or sell KXS stock. The next stock that we're going to talk about here is WELL Health Technologies. And this is another one of my recent winners that I did talk about on my channel. And I did do a review of WELL Health Technologies. If you're interested in that, there's a link in the description here. And my thoughts right now on WELL Health in the very, very short term is that they're consolidating right up here at the $5.10 level. And you can see that there's a bit of a wedge pattern forming here. So the stock price could go either above or below, but whichever way it breaks, we're going to see another leg up or leg back down. And if it does go back down, I expect a support level around $4.50. So if it drops to then and you're looking to open up a position, look for the $4.50 mark before you purchase. And as always, this is a speculative play right now because this company ultimately is not profitable. So do your due diligence on this company if you're looking to purchase into it, and invest wisely. The last stock that we're going to talk about here is Lightspeed. So Lightspeed has been slightly disappointing in my opinion, because I expected it to be a bit more like Shopify, where it have the first year sort of dilly-dallying at some sort of level and then shooting up like crazy in the second year. And right now it's kind of went up to the $40 level, came back down, and kind of went back down even further and then came back up. Who knows, this could be a long-term head and shoulders pattern where it goes, this is the first shoulder, this is the head, then there's another shoulder, and then it goes up to new highs. But I think Lightspeed, there's a lot of macroeconomic things that are, making investors a little worried about the stock right now. The one thing that I can see in the markets right now is because Lightspeed ultimately services brick and mortar stores, and those stores are still not fully operational. And COVID is coming back in a second wave, and maybe that's where we see the next shoulder here, where it comes back down, where in Canada or in the States we see a massive second wave and the country is forced to close down again. Who knows if this is going to happen, but these are just predictions of mine and things that I'm thinking through when I'm weighing if I should be purchasing Lightspeed or selling Lightspeed or holding Lightspeed. For the short term, for Lightspeed, if you're looking to buy in this company, I think I would wait for lower prices. Maybe if it came back down to the $30 level, that would be a great place to start an entry point into it, because you can see there's some good support at this level here, and it eventually ultimately goes back up above. And if you're looking to make a short-term play, look for the $30 levels and buy into there, and probably sell at the $40 to $45 level. If you're a long-term investor in the company, then buying right now, if you're expecting this to be anything like Shopify, would be a good price to buy in right now and just average in. I would average in about every single month a small amount, and that's how I play it as a long-term investor. I know I didn't exactly talk about the other stocks and how I play them, so let's go back to that right now. So for DCBO, the short-term play here will be waited out until you see some direction for where it's going to move and make your decision based off of that. I would be a little wary right now to buy at the $50 level because you have no confirmation whether it's going to go up or down. For the long term though, if you're buying DCBO, I would say the $50 level is, a decent level to purchase at. And the reason why I say that is because right now the current market cap is only $1.395 billion. And I can see this company growing to anywhere from a $5 to $10 billion in the next 5 years. And that's just because of the growth of the company is around 30 to 40% year over year. And ultimately, if a company can grow, its stock price is going to grow as well. For Dye and Durham, I think the short-term play, if you can still snatch it at $24.95 or around the $25 level, I would buy it now and wait for it to go to $26 or $27 and make that short-term play and sell right there. But if you're a long-term investor in Dye and Durham, then I think right now is a decent price to get into, because if it's anything like all the SaaS businesses on the TSX, like DCBO, you can expect it to appreciate. DCBO started at $17 and went all the way to $50, so it was roughly a 3-time increase from its IPO price. And Dye and Durham was around $14 on the first day, so if we're going to triple that price, we're looking at anywhere like $42 per share. So if you're buying it at $25, you can maybe expect the short term in the next month or 2 or even 3 months that it's going to go to maybe $30 to $40 per share. But I think over the long term for Dye and Durham, it's pretty promising because they're a SaaS business. They have some good statistics behind them, and like their 2% churn rate, their 25,000 clients, and they're continuing to grow through acquisition and mergers. As well as the market cap for this company right now is only $1 billion, so there aren't many hedge funds into this company right now. And I think as the company grows larger, it attracts more hedge funds, and as more hedge funds invest into these smaller cap companies, or once used to be smaller cap companies, then they continue to see stock price appreciation, because ultimately the stock market is built on supply and demand, and when big players come in like these investment funds, they create a lot of demand. Next stock we're going to go over is GPV, whether I'm buying more, selling at this point, or just holding. So for me, I am personally holding because I think this company still has more to offer in the long term, and I'm more of a long-term investor, and I see this as a long-term play. But in the short term, if I didn't have a position, I would be a little wary to buy at these levels. I would probably wait for it to come back down to the $3 level or $3.50 level before averaging in to a new position. And I wouldn't go in all in right away. I would maybe build up about 10% of that overall position that I want to create, and then average in from there month over month. Now let's go over the Very Good Food Company. And right now it's dropped to about $1.26. And I think that right now, as a short-term investor, you're looking for some sort of floor. So wait for it to trade, maybe sort of like a floor 3 to 4 days where it sits at a certain stock price level. But right now the trend is still going down. So I would change my recommendation to say look for some sort of floor where the stock price consolidates at a certain level before you make your purchase into the stock. But when we see some sort of support level forming, I think that the stock is going to shoot up. It won't continue down because this company ultimately has a lot of demand for their products, and I think their next quarter earnings are going to be pretty stellar. For Kinaxis, I think the short-term play for this company is to wait and see if the stock price has some sort of drop. I would wait for it to come back to around 175 before making an entry, and I think it may have some consolidation around the 175 before moving upwards. But if it does break above this 225 level and has a full candle above it, then as a short-term trader, I would enter a position right there and wait for it to pop up depending on the wedge that we see, maybe another $20 to $40, and then do your exit there. But as a long-term investor in Kinaxis, right now, I wouldn't go out and run and start a position in Kinaxis. I ultimately do think that we're going to see lower prices in the short term, maybe in the next 2 months at the 175 level. So I would wait till then before starting a position. But if you are a super long-term investor, you can always average in, and it doesn't hurt to start a position today. Now going on to WELL Health Technologies. The short-term play for WELL Health Technologies is to wait for this wedge pattern to see where the stock price breaks out. If it goes above, then make your purchase there. And if it goes below, then see if you can do some sort of shorting options in your brokerage of choice, whether that be QUESTRADE, TD, RBC, or whatever. But right now, to start a long-term position in WELL Health Technologies, I think it's still not a bad idea because the market cap of this company ultimately is still quite low. If we go here, it's around $667 million. And I think there's still a lot of opportunity for WELL Health to expand. And in the long term, I expect to see this company at the $5 billion level in around 5 years from now. So if you're a long-term investor, starting a position today, even at all-time highs, is not the worst thing in the world because it could continue going up. And a stock like this has a lot of volatility in it, and you may never see these $5 levels again. But if I were you, I wouldn't throw all my money into this. Again, average in, because as a long-term investor, you're usually more cautious. So that about wraps it up for this video. If you got any sort of value from my technical analysis, my storytelling of the stock charts, or just anything that I talked about here today, please be sure to smash that like button, as well as subscribe and hit that notification bell if you guys want more content on Canadian stocks. And leave any comments down below if you have questions on these stocks, or just want to share your thoughts on these stocks and where you think they're going. Keep up the grind and have a great